But for everybody else on YouTube, what's up? It's Flex and Joe. I'm back. We're gonna do some price action review. I'm gonna look at the I want to look at the 10 and 2. So basically, just utilizing Maple system, and we're going to we'll look at some ES, but mostly look at NQ, and just try to identify some really high probability trade setups. I will discuss some of the trade setups that I missed, as well as some of the ones that I took this week, just in an effort to try to improve my own trading and try to figure out, where I went wrong and what I could do next time in order to not miss these trade setups. Right. So we'll start on Monday, September 8th. So really quickly, I know that I was thrown off a bit in pre-market by the fact that we had such a large move down, bounce, and then we were just chopping overnight. Right here, really in this like low wick area from NFP. So this is where NFP lows in this zone. So on Friday, though, we bounced off of the daily 20 EMA, and we pushed back up. We consolidated, and we basically just closed the day near VWAP, right? So basically closing this, as a candle with a little bit of a lower wick here. Again, this NFP lows threw me off a little bit. However, it was easy to see going into the open, right, that what did we have? We had like relatively equal highs holding in this general area. You weren't quite making higher highs or higher lows. Like, yeah, you did crack a higher high here, and they were just repeatedly trying to break it. And then when they came down and broke under this, they still ultimately held this area and we're pushing up into the open, right? So going into the open, if you're going to trade the bell, knowing everything that you have here, knowing that you already have a failed breakdown that has occurred, if you're going to trade at the bell, keep in mind, this red line here is the 20 EMA. This is otherwise the 512 cloud and the 3450 cloud. This is the hourly 3450 cloud as well, also known as the MTF cloud, hourly MTF. Which obviously you can see in different examples we'll go over. It provides a pretty good bounce, especially on the 10-minute. So candle by candle is long going to the open. You can see they continue to push up. They continue to push up. And you get this drop here that happens often in the morning, right? So you get the first push. It comes down. They fake people out. They trap the short sellers, and they just absolutely rip it. So me personally, I have been waiting the first 32 minutes of every day, typically, without taking a trade. Typically. Now there were 2 times this week, or at least 2 times this week, where I didn't honor that and I took trades because I felt very strongly about those setups, and I'll cover them. But otherwise, I've not been trading the first 32 minutes, and the reason it is 32 minutes is because any day that we have news at 10 a.m., I have a rule that requires I wait for that first 2-minute candle to close following the news hitting, right? So Friday was one of those examples of a day where we have news at 10 a.m., where we had University of Michigan consumer sentiment at 10 a.m. I'm just going to try to keep an eye on chat here. I will get to Friday tilting. Yeah, I'm going to try to make my way like through the week like relatively quickly, and just try to identify like what really stands out as an absolutely great trade. So without having all the levels marked, the one thing that I do have here is that essentially you have your pre-market high right in this general area, and they ripped up. And when they ripped up, you can see here that this is like nearly a perfect golden zone bounce. I'm going to zoom in just a little bit more. So nearly a perfect golden zone bounce here. And typically speaking, the first flip into the EMAs is often bought up. And this is really as close as we get to a pre-market high break-in base sort of look. Now, I understand that a lot of people, right, myself included once upon a time, will get thrown off by this because many people are seeing, well, we have a CBC flip short, right? But your 10-minute EMAs do not align. You would just have to imagine here, the 9 EMA is like right in through here. I know a lot of you are using the 9 and the 20. Give me a second. Here, I got it. I think. There it is. Okay, there's your 9. So you have your 9 EMA studies. I'm gonna put it on this one too, so everybody will have it. Because I know a lot of people are just using Maple's 9 and 20. I use the 512 cloud, whatever. Do whatever you want to do. It's the same difference. The reason I like the 512 cloud, honestly, if you just pay attention to how price action is moving, and you see where it often pulls back to and how it reacts, it works like pretty well. But use the system that you're paid for, right? That you're paying to learn and that you have seen time and time again work out. I do have to say this too, and this is not a direct shot at anybody, and I don't want anybody to take this as an insult, right? But we know that the 10 and 2 candle by candle system works, right? And we know that it is profitable. So if you are struggling to be profitable with this system, right? With a system that we know is proven to be profitable, it means that your execution is the problem. Right? So it's either like long-term profitable. We know it is there. So it's either you're holding losers too long, you're not capitalizing properly on the winners, either you're hoping for too much or taking too little. Something that you are doing and not reviewing and refining within your own trades is the limiting factor here. And you should not forget that. You need to make sure that you're going after that. All right. Made pumpkin spice coffee and that shit is good. Okay, so with this first flip here, this is key. This is one of the price action lessons that I want to really drive home. One of the things that I have determined that greatly increases my likelihood of probability, my likelihood of a high probability setup playing in my favor. Okay, so basically, how did I increase my chances of winning trades? It is making sure that this candle by candle is in alignment within the 10 and the 2, okay? So in this situation, candle by candle flips bearish here above bullish EMAs. A lot of people are going to be looking to do what? They're going to be looking to short in this general area. Like, why am I not looking to short in this general area? And why am I looking to instead go long, right? I can see here that like just how price has pushed up, it's stair-stepped its way up, right? And now you see that it has stair-stepped its way down. And I get it. You do have the potential makings here of higher high, higher low, etc. However, you had a very strong bullish, lower high, lower low, lower high. This could be potentially a lower high. You have a very strong bullish engulfing here on the 2-minute. Okay? If nothing else, this should be like, I am not going to go short until the 10 and the 2 are in alignment. Even if that means that you have to wait for a higher probability setup. I would rather get it in when it's much higher probability. Now, many people will make a case for a trade like anywhere else, and we're not going to cover that. Like, that's not the point of this. It's just literally to follow the system that you have paid for by being in the room, right? And understanding price action as it is and what the candle bodies are telling you, right? Wicks do the damage, bodies tell the story. So, you get the candle by candle flip here. Immediately at the start of the next candle, what happens here? This is where the candle closed. This is where your 10-minute candle closed. You made a move down, right? And then the next candle, bullish engulfing. So I'm not going to expect that a lot of people are going to take this. It is pretty close to like your 5-minute orb for people who like will draw that. It is literally like right here. Your 15-minute orb, which is extremely popular, especially on like the YouTubes nowadays, is all the way up here, and that failed, So like, and I think honestly, it won't be long before the whole system becomes hip to this 15-minute orb strategy, and you're going to see this failing a lot more. But that's my personal opinion. When I first got into trading, everything was about the 30-minute orb, and now you're not seeing that getting as much respect as it once did. This is what shows me to have, I know it's really long-winded, I'll be faster in the future ones. This shows me to have caution. Forget it. I don't get the 2-minute CBC back short. I just leave it alone. This 10-minute candle ends up being completely engulfing the prior one, right? This 10-minute engulfing candle shows me everything I need to know. It's all right here on the 10. Just for the sake of this, I want to go to NQ. I want to go on the 5-minute chart. I want to see really quickly, what does this look like on the 5-minute? Okay, so you end up with a 5-minute doji here right off the 5-minute 20 EMA, right? That's the same thing as your 10-minute 9. But 5-minute candle flips, you move down, you end up with a doji here after it swept the prior candle's low, pushing up. I would not, if I saw the 5-minute candle close here at 10.25, I would not short this. No way. So this candle closes at 10.25. What else happens at 10.25? 1025 is about halfway through this candle. Now halfway through this candle, I'm getting like on the 5 minutes, not a short. I'm not saying it's a long, but it is. It ends up being a great long. So forget all that. When does the candle close? The candle closes following this candle. You do break the high. I'm sorry, hold on. Candle closes following. This is your candle close. This is the problem with looking at this and saying, oh, well, I could have bought the pullback on the 10 is you already broke the pivot high. And then you had a 2-minute CBC flip that came back down here. Now, this candle and the way this candle performs lends me to believe that, yes, we did sweep the high, but there's another good chance we're going to go up there and take it again. And then, so like this would be one that I would consider to be being taken a scalp. But I would also be looking at two things. So I'll be looking at where am I going to enter, right? If I enter immediately upon this candle's closure, which you can see the next 2-minute candle gapped up here by about a point. So, you know, I might not even get filled if I'm trying to get filled in down here. But I'm also looking to make sure that this is at least 15 points, which is my first target scale would be, and it is. And it offers you that one. You get here, and then it fails, right? And then it just literally chops. You get, you know, from there, like this is like outside of the system. You know, you want to be waiting for 10-minute candles to flip. You get a 10-minute candle that flips here. Yeah, you already swept the high, and this comes down, but this, like, there's just stuff about this that just didn't feel right, and you can see that through this chop. This is the 1050 candle. So the 1050 candle is going to end literally right here. 1050 candle ends right here. And you're looking for this. You're looking for this like pullback, but you still don't have bearish 2-minute EMAs. So there is no short, right? CBC comes back down here. You just like, this is where, you know, your patience is being tested, right? And all the while you're going to be looking at this while it's forming this like megaphoning channel. You're going to be looking at this like, damn, I want to get in long because I missed this long or this long, right? That's what's going to happen to you. And you're going to end up getting in long up here and you're going to get stuffed, okay? Like, just don't do that. That's dumb shit, okay? Don't do that, right? Like, if you can't say, like, see yourself getting in somewhere else, like here, like this is against the 10-minute CBC. It is outside of the system. However, I've talked about this 3-body reversal here where you have a nice candle that moves down. The following candle wicks down below it. Ideally, this closes as a different color. It closes as the opposing color, and then you get this. But when you get this candle closed back here, the 2-minute CBC is reclaimed. You can buy the dip. And this was a tight range day. You buy the dip, it still give you 30 plus points, right? Same thing here. Large move down. Opposing color candle closes back up. You get this one where this candle by candle flips. When it pulls back just a little bit, you can buy it, risking that candle's low. So you would have, let's say you get in here at 54. You are risking 15 points to 16 points to like right here. And unfortunately, 54. That gives you 20. That gives you 20, so that gives you at least a scale, right? It gives you at least a 1-to-1 scale, break-even stop, your break-even stopped out. Now, when you get the candle-by-candle flip here, right, at 12:10, you mean you've already seen multiple failures at the orb high, and if you didn't catch it up there, like, that's totally fine, but now you got the CBC flip candle here, which closes right there, right? Very simple. Closes right here. Pulls back into the EMAs. Not quite close enough to the 9 for you, which probably got dragged down. The 9 EMA, I am fairly certain, was not here at the time of the trade. It was not this close. It never is. It's going to get pulled into price action. That's totally fine. So these entries that look like they were like really close and like, or, you know, very close to the 20, they probably weren't either. They probably, you know, the 20 EMA was probably further up and the 9 EMA seemed like it was up here more. And that's like your best bet because in review, it's going to look better than it does in the live action. However, look what happens, right? Like, very simple. You're shorting where these stuck buyers are break-even stopping, okay? Like, that's what makes this like an ideal entry, even though you're looking at this kind of fearful, maybe like, oh, this doesn't look that great. Look at this 10-minute wick, whatever. It takes a little bit of time. It moves down. But this ends up being like scalp city. Like this day sucked, right? It just chop, 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 which, I mean, it's kind of what I figured was going to happen. And that's what they've been doing to you guys every Monday anyways. So that's why I approach Mondays, especially a busy day for me personally. I approach Mondays with a very scalp mindset. Let me get a few points. Let me see what I can do, right? And I size down and I hold for what I can hold, and that's about it. By this point, most of you guys are done, and we're going to move forward another day. Okay. I turned the MTF cloud off on this 2-minute. Oh my God, come on. Oh, no, I didn't. Not this one. We're going to turn it off. Okay. Here we go. So Tuesday, going into Tuesday. I don't have my closes marked either. Shit. Let me... That's the other thing too, is we did... This is like my own strategy. This isn't the Maple thing. So we did gap up, right? And... I'll turn the right extension off. There we go. The other part of this, my gap strategy is, and you guys will see this in future videos as I continue to go over this with more and more examples, is that from a gap fill perspective, right? If we continue to push and you know, some people call this the spike or whatever. If we continue to have the push in the direction of the gap fill, I like to see that how we interact at like the 50% mark and then the 100% mark. And you can see clear as day at the 100% mark, we were getting rejection, we were getting selling, which also lines up to with what we were getting here. I just added in as an additional confluence, which would make me more likely to go against the CBC here personally, or to just kind of say, hey, like until we get this like actual to like break out, I don't want to take this as a CBC flip long, which I should have covered. Why I wouldn't cover that. Why I wouldn't take that. I didn't do that because we are stuffed underneath this. So CBC flips long here at 11:50. That means that it closes at 12 o'clock. Right here. Okay. So why would I not want to take this candle long is because like, look what happened. This is literally a reversal setup. 3 candle structure pushes up, doji closing in the opposing color. And look how hard it's coming back down. And your 2-minute EMAs are not yet back in alignment for a bullish setup. So how would I know if I want to take this? I'm going to see multiple candles play out kind of like in this sort of fashion, right? Or whatever, where they're going to be like boop, 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 boop to the left. I'm sorry, to the right, your other left. And then the EMAs are going to drift upwards, catch it, and we lift, right? There are other examples of that. So, okay, gap fill strat is covered. Let's look at the next day. Next day, we closed here, we opened here, and we pop up. We pop up right into this pivot area, and we flush down, we fill the gap, so I'm going to turn that off because it's blocking the price action. Otherwise, what could you see here? We were CBC long, right? We were trying to hold over this area. CBC flips back short, and then it flips back long. So, like, you've got, like, 3 flips here in, like, a relatively short period of time from, you know, this 2-hour period. No worries, bro. One thing I noticed, if the CBC flips long but never overtakes the prior CBC flip short, it usually continues down. Yes, that's exactly it. That's exactly another thing. That's a great point. Thank you. I feel like I have so many different points to make that price action that's like that's a key one. So thank you. So what you're saying here is this is the one where I'll remove this. This is the one where we flip short, right? And we did not overtake it. This is the one where it flipped short, and look how it overtook it, right? So it's basically it's an engulfing candle strategy, right? And Maple calls it a flop too. I think what he teaches specifically is if you don't have follow through, where the following candle needs to close over the flip candle. And so if you went along here and it closed like this, you might as well just get out for the loss, because it's highly unlikely it's going to pop back up. Like, you know what I'm saying? Like if you were risking maybe like here or here, like just get out and take the smaller loss. But I know like purists will be like, my system says I have to honor my stop loss. It's like your system also says you should read price action. But here we are. Okay. Man, I do not like that green line. Y'all just gonna have to imagine where the hell just imagine where the 9 EMA is, okay? Throw me off. It's throwing off my color scheme. Tilting, you are so dumb. Yeah. And so look, the thing too, guys, is like, and I want to make sure that early enough on in this session that this is like hammered home, is not everybody is going to be able to just strictly trade price action. You can use price action signals along with market structure in order to effectively trade. So I'm talking about the price action signals that you're seeing on the 10 and the 2, while also keeping, a record of and keeping in mind what the market structure is, right? So if the market structure is not favorable, stop trying to trade it like that. So again, like, really crappy thing here is we pushed up, we couldn't even break the prior day's high in pre-market. Excuse me, pre-market. And then we came back down, right? So your inside day, general rule of thumb is like inside day, stay away. You get this like huge engulfing move downward, right? It bounces like pretty much right off the MTF, and then you bounce. The other thing that it does is, if I was to extend this out one more day, the Friday close gap up into Monday's open, that's the golden zone of the gap. So this golden zone has not been touched. And my gap fill strategy says that the first time it gets touched, if it's not touched in the first day, then it is going to provide a bounce, which it does. So I would be 100% looking to exit my short here or a couple points above, depending on this actual number's numerical value. For example, if this number was like 698, I'd probably want to get on around 698. So it'd be 703 to 705, because sometimes we don't actually pierce that 100 level. And that's just what I found in my backtesting. I'd much rather get out for the majority of it and leave a little meat on the bone versus try to get all the meat on the bone, and then, my hand gets caught in the cookie jar, right? And I end up with less. So, but let's look at this again. So I'm waiting. I'm seeing this crap. I'm waiting until here. I'm waiting until the 10 o'clock candle has printed. So when the 10 o'clock candle has printed, which is right here, like, what do we have going on? Well, we have not broken this pivot low yet. We're right here at pre-market low, which is not the session low. It's just the London's session low. We haven't broken that yet. But candle by candle, just barely flipped short. I would be looking at like, well, here's demand. Here's the 10-minute 200. That is a weak candle by candle flip. I'm leaving this alone. From there, you get a strong 2-minute candle by candle flip, but you're under bearish EMAs. You close right at the 2-minute EMA. So here you can decide whether or not to take this short, as you have rejected under VWAP. You have rejected the open print, and you have closed the candle. The candle's closure is under that 2-minute 20. So if you wanted to just enter, risking the prior candle's high, if you entered, even I'll give you a bad entry, like as in you didn't get in when it pushed up, and you got it when it started coming back down. Let's say you got in at, let's just call it 24. If you're in at 24, risking over the prior candle's high, you're risking about 15 points. That's not terrible. Where is your first target? From 24, your first target is going to be a pivot low break here, which is 22.75 points. So me personally, I would have already trimmed some off at between 15 or 20. And I would move stop to break even. I would have not gotten the pivot break. I would have been stopped out by this unfortunate wick here. And somebody else who left their original stop would probably still be in, which is fine. And somebody else might say, hey, they didn't break this. They pushed back up. They rejected VWAP again. And, could say, well, this candle flipped back red. I'm going to get in here. Not a terrible place to enter there as well. You're still targeting the same thing. However, if you're entering in here at like 13.5, you're still risking probably the same candles high. You're now at like a 24-point risk, and you're only going to get 12 points here on the first target. So not very good. Where do we get our bounce? That's Monday's open. That's also... Let me look at the 10-minute. This is also a sweep of the actual session low. So you've hit Monday's open and you've hit the session low. It's likely to bounce. Monday's open becomes important because this is an unfilled gap. So that's an important level. See the take profit. You see how they push it. They literally go from here all the way back above the open. Cannot sustain price above the open. It flips. You now get basing back under here. Okay, so you fail. They do not flip the CBC. When they do not flip the CBC, it's a failed CBC flip and it comes back down. I would look to short this because they have failed. The buyers failed. So what does that mean? Is that if they can pull back and I can get an entry anywhere in this general area to short, it's going to be fantastic. Anywhere in this general area. 2-minute candle by candle is short. They're like pinched EMAs. It's not great. If you want to wait though, you can wait until here. The 9 is definitely crossed under the 20. It pops back up. You can get in here and then it goes. But this will be a little bit tricky in live, right? We have the advantage of knowing that this falls off. Like, you're not going to know that. Okay, so that's pretty tough. You get a candle by candle flip off the bottom. Like, what happened here? Very large move candle on the 10. This is a 3 candle reversal pattern. Very large move in this. Next candle sweeps that candle's low, flips, closes back up the other way. Here we go. 10-minute candle by candle flips. You can go short off of this. I can understand why people would think that this is short, right? Even though the 10-minute candle by candle is long. Comes back down. You get a weak flip, weak follow through. Small body candles. It pushes back up. You get a really, really, really weak pullback here. What does that look like? At 12. This is your 12 o'clock candle, so this is going to close at 12:10. And VWAP is like super low. VWAP was like the orb low. So yeah, this is where that candle actually closes, the following one. So this is where the candle by candle flips. Candle by candle flips, but you get a huge engulfing candle here. 2-minute CBC flips back long, so that's confirmation. Now I have 10-minute CBC is long, 2-minute CBC is long, and the 2-minute EMAs are favorable. The 10-minute EMAs look like they're about to cross, which is what you can definitely see the 9 is coming back up. So from here, you get this, how this glides over to the side before it lifts. So 1, 2, you can take it. You're targeting this high. You're probably risking this low. So that's 81. That's 12. And honestly, if I'm not generous with the entry and you got in here, you're risking about 17 points to make 14. That's not that great. And I wouldn't feel that great about it either. One of the things that I've tried to adopt really, really well lately, especially, is just to know, like, where is my true risk, where I would say, so like, I'm definitely wrong on this trade, and like, where is my first target? And if the first target does not outweigh the true risk, then it's not worth it. It's not just about how far the candle the trade can potentially go, because you can see we just go up and up and up from there, but how it's all going to potentially play out. You get a lot of 10-minute dojis here, but this is totally normal. This is like a late day. You know, Ripster would call this like a 512 curl. This is a late day 912, 920 cross. Doji, 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 indecision, right? But, and then you get the lift, and then it goes sideways, and then it lifts again. So, pretty choppy shit. This is where you're going to get chopped to shit, especially if you're waiting for excessive confirmation. If you're not willing to, you know, try to get an entry in here, this one's tough. But look, again, 3-body reversal problem. Problem. Setup. Three candle reversal, right? Large move down. Doji of opposing color. If you entered in here at 05, you would be risking 10 points. And where's your really your target is up here. This is a, math is hard right now, 28, 27 and a half point target. But from 05, you do get a 15-point scale. You could move it up to around a break-even stop, and you would not be stopped. So even though this sits here in the slow consolidation portion of the day, this is actually a pretty good setup. Again, that 3-candle reversal setup happens here as well. Moves down into the EMA. 2-minute 9 is holding. This is right after the candle by candle flipped, actually. Yeah, so this actually here, I just overlooked that earlier. This was great as well. Like, again, taking when this candle turned green here. One thing that you guys should all do is probably go back and look to it, like what Maple's entries are. So let's go to the next day. Otherwise, I want to get to Friday. Okay. Next day, we gap up. What was this? This was Wednesday PPI. So Wednesday PPI gaps up on the news, right? You can see obviously we put in this big upper wick and they're consolidating. They're struggling here for a while. We make this big gap up. We make almost no move initially upwards and we just come knifing back down to the golden zone. When we come down to the golden zone, right? Like I see that there's no candles closing below. Let me get into the next day. Here we go. There are no strong candle closures underneath the 61 fib. So no strong candle closures under the 61 fib. My gap fill strategy implores me to take this long because we're probably going to make a move back upwards, which we do. Where do we move back upwards? Like this is the simple market structure. We're moving back upwards into here. Why is this an area of importance? Anybody still alive and want to tell me why that's an area of importance and why we are rejecting right there? Well, it is a lower high. Correct. It is a lower high into what? Simple concept, right? People would say it's something turns into something. It's resistance now. Yep. Yep. Anybody else out there? Anybody else alive besides Poetic Globex Defender? Much love, dog. Appreciate you tuning in. I hope you're learning something. Or at least, if nothing else, I'm reiterating to you what you already know. It's a fib. You know, I didn't actually, but that is a great point. It is the Fibonacci retracement of this bearish move here. Good job. Good job. And I was also thinking, you were in the stream chat, supply, yeah, exactly, support, turn, and resistance, right? So in the pre-market, when they swooped back down here, they picked it up and then they couldn't push back over these pivots. So now these are like buyers that are stuck because look how they got knifed through. Look how some people were willing to jump out for like less than break even right here because you got the swift move down. And then you're just getting repeated selling over again. Like you're like, it's just, you watch this, if you watch this back on the tape, like this is just terrible. It's up, down, up, down, up, down, up, down. And guaranteed, like I can guarantee that somebody listening to this or somebody who watches this, they got ran over here because what people are doing, and I know this because it's sometimes even a natural inclination to try to do this, is they're buying the upper portions of these candles because when the red candles come down, in my case, the black candles come down, they're very, very scared to buy them. And instead, they're waiting for more confirmation. Red candle comes down. CBC finally flips back long. Okay, I want to go long. And they're buying like somewhere in this general range. I mean, even if you bought in here, this wasn't like it was like terrible. But you only get like 13 points. So people probably miss the scale and they get frustrated. All right. But all these other ones, like, CBC flips back short, flips back long. They see it coming back down. And then it forms this full red body candle that's all the way down here. Or this one was a red body candle all the way down here. And they're like, oh shit. Somebody probably jumped in on this one short and got slapped. Like, I know this because I've seen this. And like, I get DMs like, oh, I don't know what the F I'm doing wrong. Well, until I see your trades, I don't know what the F you're doing wrong either. So don't message me. Like, don't waste my time. Send me some damn trades. Okay? But this is the problem with chasing, right? This crappy price action that we now only know in hindsight is the problem with chasing. So if you systematically do not have a trade setup that's in here, you are trading in the middle of the range, and it is likely to do this. So just stay the F away. Just stay away until you get a decisive move one way or the other. If it rips up, there's a good chance it's going to pull back because it almost always does. And you can see if that pullback's strong enough to take long. If not, you just wait it out. So now you have support turned into resistance. You have demand. Old demand becomes new supply, etc. And you get a nice, strong CBC flip short here. Then this is the same golden zone, right? I'm gonna leave that on actually. So same thing here. You get this bouncing, blah blah blah. So let's look at this as from taking this short perspective. Here's a 12 o'clock candle. further along. Sorry. I just want to see. No. 11:10 candle. My bad. 11:10 candle. 11:10 candles right here. So it closes. This is the closing candle. Closes here. Can't go short here. You're too extended from the EMAs. Price is drifting away from you. Price is pulling away from you. You are like, oh my God, this is going to be the short. We're going to go to the gulag. I got to get in short. So you get in short here. And then you get stopped because it pulls back 25 points on you. And that's like your freaking max pain, like right at the top. And then it comes right back to your entrance. And you're like, what the fuck? It's going to go short. I got to go short again. And then you go short and you get stopped a second time. And now you're on full blown tilt. Sound familiar? Anybody else like that? Somebody tell me you've experienced that, bro. Account blown. Boom. Boom. Poetic says me. Dude, hey, no, ain't no shame in it. Tilting. Tilting's like, holy shit, Joe, see me. Dude, ain't no shame in it. You know why? Because I've done it. Like, that's fine. I'll be the first one to admit it. Like, I've literally done that where I've taken a shitty entry, I take the stop, and then I take another shitty entry, and I take a second stop, and then I'm heated. Like, I am feeling pissed off. This candle by candle flip here. So this is where the 10-minute candle closes when we go back long. I just don't really like it though, because you're inside the range. And then the problem that we're having, the problem that I see like immediately is this. So like, and I'm gonna draw it like this, but immediately like what I would be really concerned with is this little bit right here. Is like right as we push into here, it was immediate rejection, but then they buy it back up, and then they push it back up again, and then it's like doji is like, that's not looking good. Like I'm waiting for this to like pull back and glide into the EMAs, and then you get a 2-minute candle by candle flip. So now I get the flip. I waited for the candle that pulls back down to the EMAs to close. I see it. I get it that somebody would probably say, hey, well, I don't know why I did that. They're probably going to say, hey, Joe, I was going long here thinking that like this was holding. And so we pushed up, we broke over this pivot. I thought we were basing on this pivot. And it's like, yeah, but we already did that. Like we already came back down and tapped this once. Like this is all way too close together. I mean, you can do that. If you want to go along like right at the top of these bodies, like that's fine. But, you know, you're going to end up risking to down here only to, you know, what's this? Like you're going for like, going for a 9-point reward for a 15-point risk, you know, or more. It's not really the most advantageous trade setup to take. So if you have to wait, then I see the 2-minute candle by candle flips. Now I'm like, I really have to wait. And then it craps out. And on the one hand, you could be upset that you missed that short, but on the other hand, you should be happy that you didn't take a losing long trade. Okay? Because it's like, well, the 10-minute was bullish, the 2-minute was bullish, the 2-minute EMAs were bullish, so I just took it the first, like, I don't know how many times I've gone over this type of trade setup with people who will DM me their actual trades, and I say, well, yeah, but like, the first, like this is the, you know, it just comes down and now it's just crashing through. So even if you waited for it to touch and then it got bought back up, and you saw it got bought back up, and let's say this candle didn't close as a 2-minute flip, it gets bought back up, like you're good because it's still bullish. It came down, it touched, it closed back above. Okay, buy the close, or maybe see if you get a little bit of a wick and buy that wick, right? Risking that candle's low now. Right, just assuming that maybe this was like a low wick and it closed back up here inside this body, and you never close. You never flip the 2-minute CVC. But you stay out of a losing long trade. Fine, right? Like that's super helpful. Even if you didn't know what was going on and what was likely going to happen, this is all that you had on the 10-minute with the new 10-minute wicking around and forming, and it's going up and down. Like, how does this look strong when you see this price action that you're pushing into here? You just saw old demand become new supply. So how do you know that's not the same thing now happening here? You don't. So you're like, damn, like I'm kind of stuck here and I have to be patient. The impatient side of you who has just waited 30 minutes and didn't take the short or whatever is like, damn it, I just want to make some effing money. Right? And that's how the casino gets you. So just wait. Like we get paid to wait. 10-minute candle by candle flip here at 12 o'clock. 12 o'clock flip is on this candle at 12:08. Boom, boom, boom. 3 candle. This is not quite the 3 candle reversal pattern because this one doesn't sweep the high here. But you do get the 2-minute candle by candle flip back long, which is tough because now you don't have 100% agreement in order to take like the A plus like short, which would be everything would be in agreement. So if you didn't take this one, or you just said, hey, you know what, I don't want to go short here, I don't like it, or whatever. It's kind of unfortunate, but me personally, I would take it, even though I didn't have the 2-minute, and I would just that's where discretion comes into play, and I can't quite like program all this in, is because I would say, yeah, you had a 2-minute flip, this candle couldn't close above it, this candle got bought back down, couldn't close above it, this candle pops back up, it pops back up, it doesn't break that candle's high. When that candle turns back red, I can get in short on that candle when it turns back red at 37. And my risk where I would say, hey, I'm wrong, is like 6 points. Say I give it to 43, maybe 44, talking about a 7-point risk. If I'm in there at 37, and what am I targeting? I'm targeting first this pivot low break because this pivot didn't break, right? So what I'm seeing here is big flush down, lower high setup here on the micro. This is a pullback where it is sell the green, buy the red, right? And this is 15. So I'm going to be able to get 15 points on my first scale while only risking 7. That's 2 to 1. All right. Move to a break even stop. If you move to a break even stop, you would have been able to scale out here on the orb low, and then it pops back up and you go, this was Wednesday. Oh shit. This is my trade. Dude, I took this trade. My bad. Sorry, I meant to say that earlier. This was on my list. I couldn't remember if this was Wednesday or Thursday trade. This is Wednesday's trade. So boom. And I even took this trade as a scalp here. The same thing where old demand, it was a common theme this day. Old demand turns into new supply, short, and moved my stop and ended up getting stopped out of both of those like scalp trades. And then I went and took a nap and the entire market dumped. All right. So from there, last one, right? Orb low, hold supply, moves up here. So you're at the orb low, you move back up. We are now rejecting and not able to close back above the golden zone of the gap. My gap fill strategy says we are likely to go fill the gap then in the same day, because now we've seen gap golden zone failing to hold on the day that the gap was created. So we're going to go down and test the other side. If we go down and test the other side, that's where we're headed. So we get rid of those bright orange circles for a moment. Come on, dude. Control Z. There we go. Candle by candle flips long off of the orb low. Like, why wouldn't you take this? Why wouldn't I take it? Is because you really don't have. The 2-minute EMAs like barely cross, and you're into bearish 10-minute EMAs that are now starting to fan out. You're also under VWAP and under the 10-minute 50 EMA. And you've made successive lower highs all the way down. So, Maple would talk about this as well. He would say, like, typically to see us to go long, we need not only, a higher high, but higher low, right? So you need to have something hold here. Higher high, higher low. I think that's what he says. I'm getting that right. Somebody can correct me if I'm wrong in the chat. Those pops above bearish EMAs I look at it as a FOMO. Yep. It's fucking tilting. Sorry, bro. Hey, Jaybird's with us, so that's good. All of us have blown accounts being silly. I get it. Like, it's just easy to chase because you just, like, you have all that confirmation and you have that recency bias. Oh, the market is going down, and therefore the market will continue to go down. So I can make money betting on the market to go down. Well, no, it doesn't work like that. You can't bet higher, or you can't take a bet saying, hey, the last guy got blackjack, I'm going to get blackjack. Like, that's not how that works. Maybe not the best example, but you follow. I hope you follow. Okay, moves down, pulls back to the 2-minute EMA, starts basing under the orb low here. This is prime time setup. Look, 2-minute flips back bearish. Again, you get another knife. 2-minute flip back bearish. This was 10-minute. That's 1310. So yeah, this candle closes here. You're a little bit extended. It pulls back, but you're a little bit extended. Kind of an aggressive entry for sure. However, aggressive entry for sure. However, after breaking over this pivot, failing to reclaim and hold over the same place you took the, or I took the original short. I wasn't here to watch this live. Like, when you see this as moving down so aggressively, you understand it's already taken or it's already grabbed any available liquidity up here, whatever you want to call it, whatever concepts you want to lean on. But sticking to the system, this is still a sell the green, buy the red sort of scenario. And you should understand, with enough practice and time under your belt now, that going short in here, where are we likely to go? We are likely to break a new low of day, right? And so going short, even if you waited for that candle here, it's about 13-ish points, right? And you're going to be risking more to be wrong, but you're likely to keep going, and it'll be a decent trade setup. But that's what being aggressive carries more risk. If you just wait and you wait for this sort of setup and you see, hey, we don't get the reversal candle structure because this candle didn't break the low. So, okay, so I'm looking at this as like it's going to pull back. It's going to pull back. It's pulling back. Now on the 10-minute, it pulls back and is failing to flip candle by candle to the long side. You get this candle here too, especially. Candle by candle flips short on the 2-minute. Maybe you take it, whatever. That's fine. Like, ideally, or just even like from a risk analysis perspective, I could see how anybody would see this candle flip short and then they take this as a long, like in through here. And unfortunately, and this is likely what exactly happened, right? Is that somebody who went short like somewhere in this general area, or even if you were good, you tried to get to the orb high or the orb low, right? Which is the initial balance low, right off of 23,900. This is tough because you're like right smack dab in the middle of the bill breaker zone. But if you were in here, if you got in anywhere in here, if you just by default had a 15-point stop, you never got stopped. So depending on which broker you guys are using, there is, different tools for like risk reward analysis, right? Where you could just like essentially have a box. But like in TOS, you could, in Thinkorswim, you could just do the same thing, and you could just have like a, like if you leave the 50% or whatever, I don't know, you could just change this around, and you could just coordinate this to being like, hey, that's my, we'll just do it like this. 770. There we go. Okay, so there we go. It's built. All right. So wherever you enter, we're gonna do this. We're gonna put this. We're gonna put this on the right. We're gonna put this on the right. So I know what I'm doing here. Hold on. There we go. Okay. So if the 50% line was like your entry, and you're just like looking at this, backtesting it, like, wow, I could have entered like well under, or right at the 2-minute 9 EMA and not been stopped. It would have been close, but I would not have gotten stopped. And if I entered right here, like, okay, we just had a 2-minute candle by candle flip here. I'm going to enter in short at the orb low. Like if it gives me, I'm going to put a resting order in there, and I get in, I'm in short right at 23,900, 15-point risk, 15-point target. It's chopping. Okay, it's chopping. 10-minute candle hasn't flipped. 10-minute candle hasn't flipped. First target hit. Go to break even stop. You're depending on, oh man, it'd be super close. You might get stopped out there, and then it goes. Okay. Just like trying to give you guys like an example of something you can do when you're backtesting. So just look at your entries and your exits. But once you get this 10-minute the hammer candle here, it's just showing you that the buyers are failing too. Like this is like ready to just like crap out, and that's exactly what happens. This is your 1350 candle, so that's going to close at 1400, or sorry, 1358. It closes right here. You get another. So if you got stopped out, depending on what you did here, or you didn't do it, you get another very quick orb low tap where it comes in here. 2-minute candle by candle flips back short. You get a very nice pullback. Like this right here is great. Like super, super, super great. Very, very good. You're showing the weakness here under the orb, all that stuff. I'm sure if I went back and looked too, we probably have something that coincides really well on the VIX, and like using my bases loaded strategy and all that stuff, it was probably all there, right? Great short, moves down lower. What do? We fill the gap. Gap is filled. MTF cloud, small bounce. This retracement probably takes people out, and it's 34-point pullback. But if you know, and again, I don't think you guys are going to get in there, right? You're probably going to, like most people are probably going to get in like probably closer where the arrow is, but between the 9 and 20 right there is just A+. And somebody's going to say, well, like you broke under that pivot. Yeah, you did, but this is the major pivot to watch out for, right? Because you're just kind of holding, so you didn't break this one, you're fine. And then you break it. All right. I feel like we're good on Wednesday. So we're gonna delete this. Move this over here just so I have it. Thursday. Thursday was CPI day. Thursday was fun. Thursday was fun. Oh my god. Okay, Thursday CPI. I was live on Thursday. I'll go over the 2 trades I took here. First trade I took was the short. Why did I go short here? Right? We're only a few minutes in. I went short here at like 80. I think it was like literally 80 and a quarter, like 80.25. So that's like right there. So why did I go short there? Those of you who've been paying attention so far in this session, it is a very, very simple concept. We had broken over the pivot. We showed the 3-candle reversal signal on the 2-minute. We had a weak-looking candle here. We had a candle that breaks the high, closes back down as a doji, and the next candle flushes it, and it engulfs it. It nearly flips the CBC. It was close enough. I decided it was worth the risk. Bobo over pivot. That's exactly what it looked like. Now, if we look left, what I was looking at too is we had rejection up over all of this pivot here as well. And where, again, stuck buyers are potentially looking to get out. Or if you say that's where sellers had their stops, they get their stops taken and then it goes in that direction anyways. Felt like there was too much there going on. And we broke back over the pivot. So it was a very, very, very easy trade. I get trail stopped out on this candle, which even now in hindsight, I don't feel bad about, right? Like we had doji and then we had another doji that went lower. And to be honest, like I was expecting some sort of pullback candle. I just didn't think it would be this significant, and it hit the trail stop. But this was like still like 20-point target, 40-point target, then like lackadaisical trail. Because again, I was in here at 80. Yeah, I mean I scaled before VWAP. And so what's the give back on this? Give back is like 30 points on that one. I don't know. Feel pretty good about it overall. I feel pretty alright about it. Let me just do one other thing real quick. Oh no. Oh no, that's right. This is where I F this up. This is where I F this up. Yeah. When we had this here, like I should have put this up here more. And then it would only been like a 25-point give back. So I failed to move my stop down. And I think that's also partly one of the things that, you know, was impacted by me leading the stream is I should have moved this further down because we were bouncing off of the golden zone of the gap up. So like this, you know, we gap up here, we gap up on news. This is the golden zone interaction here from the gap up. So that's concern number one. Then concern number two is if we actually take this session low, and I think this was doubled, right? Yeah, the session low to the session high that was made here. I tapped the 50% of there of it as well. So it was like prime time for buyers. And yeah, that was my bad. So I should have managed my stop probably a little bit more aggressively, or in hindsight, just taken the trade off when it hit the 61 fib. Because like let me just re-add that for a second. So the problem is it hit the 61 fib, right, the first time and snatched back up. And so when it did that and it moved back down through the 61 fib, at the very least, I should have put my stop at the 50, which would have been me giving back only about like 16, 17 points at most. However, if it wanted to keep trailing off, or if it had made a more aggressive move lower, I would have moved my stop to the 61. That's how I would normally manage that. I didn't manage that as well as I could. So, you know, we live and we learn, right? And we got to improve. That's why we study. So the other long trade that I did take as well, preemptive CBC flip. Here, I don't think it was poetic. I don't think it was you, dude. I think it was Professor Finesser who caught this long, whatever, because I called that I was long out here at 50. We caught this 50s long. It moved up. It broke the pivot high. It broke the pivot high, and then like initially, as soon as it snapped above and it moved back down, which you could see on replay, it made this snapping motion and boop boop, like that alerted me to it. And as it started to drift back down, I just closed it out. So I did catch the majority of that one. It came back down to like basically the exact same entry and was awesome, right? Why wouldn't I? So if we go like, and I get it that I took 2 trades against the system, right? Because CBC was long here, I went short. CBC was short here, I went long. This one though, like why would I go long? It's the same thing, the 3 candle reversal. Strong move down, wicks lower, breaks the candles low, closes back above. This next candle moves down first and then turn back green. When that candle turned back green, which is here, right? It starts to move up, got in, it comes back down, and then, you know, goes a little red and then comes back green, and then boom, you're getting a scale. I think it was Professor 2 Poetic, I think. My bad. I know at least one person in the group caught that one with me. Or I should say caught that one because of me. Because I was like, yeah, I'm long. And Han was on there too. Yep, plus you had bullish EMAs, right? And so it did hold the EMAs, right? You had one candle close below, right back to closing above. So, you know, again, the market structure is key there, right? So like by the time, like once I already got stopped out of the short, and then I realized like, oh, we have this golden zone. People are talking in chat about bullish golden zones holding. I'm seeing all that shaping up. I'm like, yeah, we're going to go over and break the high. That's exactly what we did. Once we go over and break the high, if you look at the RT8 session, we come back down and hit the golden zone of it again, right? So we saw like the day prior, common theme. Now we're seeing the common theme that's playing out on this particular day. I did not catch this long, but I wish I would have. How would I have caught this long? 3 candle reversal pattern here, right? So, you know, it comes back down into the EMAs. The same thing that happens here is you get the wick below, and then it starts to push back up, right? So could have caught this here being that it was a golden zone. Could have caught this here that it made the move below the candle by candle flip and pop back up green. Or you could say, because this is the 10-10 candle, so it closed at 10-18 right here. And then you see, like, I get it that people are probably looking to immediately take this short because, oh, we wicked above the orb high and CBC, whatever. Yeah, but we already met one of the key objectives. Remember that when we have a FOBO of the either the initial balance or the opening range, initial balance is just opening range for the first hour. When you have that, like, what is your immediate first target? It is the mid orb area, right? I know Maple says VWAP, but a lot of the times they're at the same damn area. Like they're so close, like this example. So like either VWAP, mid orb. In this case, you basically get both, right? From there, you are seeing, hey, wait a second, I'm in the bullish golden zone. You should be able to easily tell that. But if you can't, like for me, I can always easily tell that because I'm like, well, orb low, orb high, mid orb, 50%, right? Like that's why I keep those levels on there all the time. So I don't have to draw the fib. I know we're in the 50% range because it's right there. So it closes like this. It wicks down. You start to get choppy. It is not moving any lower. And then it reclaims the EMAs. All right. So this is like real aggressive to take this here. And I totally get that if somebody didn't take that, right? It breaks it higher. It comes down lower, right? This isn't an automatic short. It's not. Even if you said, well, Joe, it's looks like a fake out breakout. It's a 3 candle reversal. You had this, you sweeps the candles high, closes the opposing color. I could get in short on this one and move down. Okay, first off, that's not the strategy, okay, that you should be trying to hone in on. You should be trying to hone in on Maple's 10 and 2 or 10 and 3 CBC system, right? Which is going to help you get your consistent base hits, okay? But secondly, you should just be waiting for that confirmation, which the CBC flip is what that gives you, okay? CBC flip gives confirmation on the 10, you buy or sell the pullbacks on the 2 or the 3, the lower time frame, and you get it. No candle by candle flip here. So when we pop back up, right, which is part of this same candle, we pop back up and you are seeing that they are failing to flip back short, and you close back above the orb now. This candle. Wait for it, wait for it. Oh, we touched the 2-minute 9. 2-minute 9 tap and buy. Doesn't matter that this one, because even if you just got in like in this general area here, this is 24,000, right? Anywhere in this general area, 24,000, you're going to get over 15 points, right? That's 17 points that high there. This is also too where on the other chart, and I think because I was live this day, this was when I had it marked as BFL for the big fucking level, right? FAQ. So it is a rejection of that level and now a breakthrough and a base of that level, albeit an ugly base. I understand that, but it works. And then boom, you get this pop and you sell into strength, especially if you are on an account with intraday trailing drawdown. For the love of God, sell into strength. Don't let it come back against you. My target, I know. Oh, yeah, exactly. Yeah, you're 17 points. Right, exactly. That's it. You break it back above, boom. And that's all you need. Shiny had asked a question about how to get like a 1% return, which is essentially, I think he said 17 points on NQ. $340, right? That's based off of the margin requirements of $34,000 for NQ, which you could see right here. NQ 30. It's actually 35,900. So you'd need 18 points now for that 1% on margin. Okay. Honestly, and then it gets into shit. Like, not quite that reversal pattern. This looks exceptionally weak. I'm expecting a pullback. It pulls right back to the initial balance high. You can see it goes right back to the scene of the crime with like this whole bounce off of the 24,000 area. Pushes back up. This pop back up here, right? Yes, 10-minute candle by candle is short, but this offers you decent RR. I mean, you get about 20 points here. You're targeting the highs. We're at all-time highs. This is hard. It comes back down. Same thing again. It's just real choppy. This is hard. So if you don't have any of this in your playbook, you should study situations like this where we break out of the orb and we literally go sideways for the remainder of the day. If you're not equipped or prepared to trade and chop, then don't trade it. But Joe, I don't know it's going to be chop at the time that it's happening. Correct, you don't. So what can you do to best minimize risk? Enter in closer to an EMA level as well as a horizontal level of support, right? Or a horizontal key level. Get both of them. If you have both of them, you'll be fine. In this situation, what happens here? You have a wick down where it breaks back under the orb and immediately fires back up to the EMAs, comes back down and holds the higher low. So when it holds the higher low here and it fails to break down lower and and like guys, I cannot tell you how many times that this has saved me just even jumping out of like a week short because I understanding what's probably gonna happen. Okay, like just let's focus on this little area for the time being. When we come down and we've broken the orb high, we've broken through a key level and we cannot close below it, and we snap back up to the EMAs. So now you have like this essential, very micro, I was going to call that consolidation area, right? It's just very little, this little range. Went down, we went up, went down, we went up, we went down, we went up, we went down. And when we go down here this one last time, the wicks in this area, we cannot break back above the orb, and the buyers are holding stronger and you're not getting any candles closing, okay, lower, right? Not only do you not get any wicks closing lower, right? You can't get the candles like closing under the prior ones, and it starts to fizzle out. Look how the fizzling starts here. Look where this candle closed. Look where this candle closed. Not above that. Above that low. Closing above that low. 2-minute CBC flip. If I was short from anywhere up here, and I already scaled because this was 15 points, it's far better to just hit the eject button when this 2-minute candle by candle flips. Most of the time. Because I'm recognizing that I am now driving into horizontal support here. And I'm likely to bounce. I'm coming sharply into the level. And it's not going to work. Some people would say, hey, you know what? This is overall bullish market structure. I didn't take the short, which is totally fine. I didn't like the short, which is totally fine. But now we're back at the horizontal bullish level of support. And I'm seeing the buyers have stepped up, right? You saw this one. Maybe they took it long up here, which I don't particularly like. But if they took it long up here at 09, and they said, I'm going to risk the low, that's a 15-point risk. They do not get stopped, although it is a little early. They don't get stopped. Okay? They still get a winning trade off of a horizontal level of support. And it happens again here. And this is almost that 3-candle reversal. 10-minute closes right into the 10-minute 20. The next candle fires back above. And the tough part is that how long, because this range becomes so tight, we're going to talk about that in a second. The range becomes so tight. Right, like what's this whole range? 31 points. 31 points in... Oh my god, dude. In an hour and a half. In an hour and a half, price actions stay within 31 points on NQ. That is ungodly slow. We're going to go over why it's getting so slow in a minute too. So, horizontal levels of support. Friday. So tilting, if you want to share any areas where you said you had trouble on Friday, I'll be happy to try to point those out specifically. But otherwise, just discuss what I saw on Friday. I think it was tilting, right? Hold on one second. Yep, can you do Friday? I got absolutely fine. Friday. So the only news that we had on the books was 10 a.m. Michigan consumer sentiment, which was, of course, right here, which created this big gap in price action where price jumped up, and VIX did something absolutely wonky, where it like completely gapped down and then like surged all the way back up, and it was a little bit difficult to trade or to try to have the overlapping thesis there. But first thing we did off of the open was fill the gap up, right? That is literally the first thing we did. I made a monumental mistake, okay, in not taking this long. I could have taken it here, or I could have taken it here. Both of these being A+ like longs for me. All right, I shouldn't say A+. I don't want somebody to be like, Joe, is that really your A+ setup? Like, no, but it is as a highly successful, at least trade scalp. Okay. And because I was waiting for news and I was committed to waiting to 10:02, I didn't take it. However, I do see in hindsight that we moved down, we filled this gap, and then what did we do? We basically had the reversal pattern right off of the gap fill, like literally like right off of my levels. And then not only that, if you look at from the session low to the session high, that was also a golden zone, which I knew had played out a couple times already in the week. And then we pushed back up here. We didn't quite hit the open. We came back down, and then the 2-minute candle closed right inside the golden zone again, which told me we were likely to go higher. And then we went higher, and then we came back down to the golden zone again. And for me personally, it's like 1, 2, 3, like 4 different times I should have gone long here with like the appropriate thesis, alongside the fact of having the 10-minute CBC be in my favor, which was basically from 10 a.m. on. Okay, like post 10 a.m. I'm 99% certain that Maple took this long. Like 99% certain. He took one at 10:16. Yeah, right here. That's literally right here. 10:16 a.m. NQ long, 10-minute CBC risk. 3-candle reversal pattern off of VWAP. Like 10-minute CBC is long. For anybody who took the short here, and I know that somebody took this short because we talked, or I talked to them about it in chat, like this right here, and I'm gonna hide some of these horizontal levels for a second so we can just get everything. Can I undo that? Yeah, all right. I'll put them back. Just so that it's very, very clear to see. This is a terrible short. Like, this is a terrible, terrible short. The 10-minute CPC hasn't flipped yet, right? Like, this is the 10-10 candle. I get it that the first thing it did was wick up and then it flushed, but like, this is a terrible short, right? Like, this is like very predictive. It's not very repeatable. Like, I don't know why someone would be thinking that this is a short that's going to work, especially going short like here, right? Like, once you go short here, you've already had like a VWAP bounce. You already had that they failed to break under this pivot. You already have the 3-candle reversal pattern playing out exceptionally well. Like, literally Maple goes long, they go short, it just plays out. Yep. Can I unmute you? No, I can't unmute you. It's a stage. You got to just talk on stage. Hold on, I think I can invite you to talk on stage. Hold on. You're not muted. There you go. You're on stage now. There you go. Yeah, absolutely. Absolutely, exactly. That literally the wicks are stair-stepping their ways up. But this, like, a big part of being successful and is going to be avoiding losing trades. And when price action moves fast, if all you're doing is try to trade price action, it's so easy to get roped into the crap. Okay? That was all crap. So let me just go back to 2-minute with the levels on. Okay. This is the wrong day. Sorry. All right. Phenomenal trade opportunity here. Right here. Phenomenal. Phenomenal, phenomenal, phenomenal. Like, instantly you see when it wicks down under the orb that these buyers, that these sellers here, they're looking to get out. And there is no 2-minute candle by candle flip. And literally, if you just said, hey, I'm going to buy the orb or whatever, I'm going to buy this orb level, right? That's 64. You don't get much, right? It only gives you about 10. So you kind of sit through these few moments of like, hey, I was up 12 points or 10.5 points or whatever it is based off of your entry, and I didn't get the scale, right? If you're looking for 15, but you do end up getting the scale. And then, it's just accepting the risk and then waiting, right? Like, if you got in on the orb and you just said, hey, that's my 15 points. Where's my little doohickey? There we go. Boom. Boom. So, delete this line. There's your risk. There's your risk right here. Why is it appropriate to have your risk underneath this? Well, this is the strong candle that broke the pivot. So I'm expecting this candle to hold. If this candle is going to hold, then I'm okay getting in here when price pulls back. I have no 2-minute CBC flip, and I have a very, very strong move here, very aggressive move that has likely pushed people off sides. Which people got pushed off sides? These people. What do these people want to do? They want to get out. How are they going to get out? They're going to buy. Like, so once you start understanding that dynamic and you're like, who's stuck? Who's not stuck? Who's in? Who's getting out? Where can I join? Boom. Like this though is like as A+ as we can probably get. This is the 5-minute chart. Five-minute chart. And you just end up with a little doji. Yeah. Big engulfing candle, little doji. It wicks down, like fake out, traps anybody who's trying to go short, whatever, and then finally pops up. Okay. So very, very good long there. If you miss that one, if you can believe it, I know it's probably really hard to believe. If you miss this huge pop at 1032, they gave you another chance less than 10 minutes later. 10 minutes later. 10 minutes later, the stuck sellers who were sitting here on what became the initial balance high, your first 1 hour of trading. Right? Am I right? Is that right? No, that's not right. That is not right. The initial balance high should be up here. I don't know why that line is wrong. I'm going to have to fix that. Anyways, that line is wrong. But either way, this is your initial balance high. It doesn't matter. Right here. This is your initial balance high, these wicks. Look what happens. They come back down. They touch those wicks. No CBC flips. Like, this is the A+ stuff where you're like, yeah, I'm taking this. Like, you got to understand, like, I've got to take this. And even if you just waited and said, I'm going to wait for these wicks to get tapped and I'm going to buy in, Robbie is exceptionally good at this. I know Robbie is exceptionally good at this because Robbie's looking to buy this shit again over here. Or, oh, hey, they wicked under here. He'll buy. And like that's like almost, these are almost instant wins, right? Oh, we broke under these wicks or whatever here. I got this for support, blah, 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 blah. Buy. Instant wins. Instant win, instant win, instant win. Instant, but it's as damn close as you're going to get. So where's my doohickey? Let's move it up. Say you got in there. Again, we're using that same pivot. Okay, where is your stop? Delete this price level. Where's your stop? Below this. We'll get rid of this. We'll get rid of this. I guess we got to get rid of this too, because this is wrong. If this is your entry right here, right? Buying the base of this earlier pivot, if you're getting in here around the 70s, looking for the full bill breaker, which you don't get. I often don't think we should personally try to go for the 20s, right? I mean, if you get to the 10, I think that's plenty. That's 30 points. That's $600 for a mini. You know, we're $60 for one micro. It's pretty damn good. Look though, here, risk. Why risk here? Underneath this pivot. 15-point risk, 15-point reward. You get your 15-point reward. Stop goes to break even. Now you're at break even. There's your first 15-point reward. There's 2 to 1. You get 2 to 1. When you get 2 to 1 and it just keeps snapping up, you manage it from there. In my opinion, though, I'm going to feel very, very strongly about this. If you were just saying, hey, I'm going to just trail this off, and you saw you got 2 to 1, like, I would for sure be moving my stop to underneath this candle's low. Because, personally, this is not financial advice by any means, personally, I would say, wait a second, I could have had 2 to 1. It's coming back down. It didn't close CBC flip short. The next one didn't CBC flip short. The next one wicked up, and then it closed back down. Like, I'd be like, this is not good. This is not good, right? Because now I've broken higher, closed back down as a doji. Like, I need to make sure my stop is at least here, if not just taking it off there and getting almost the 2 to 1 of 30 points. And then, you know, it's one of those things where you, over time, you track, you evaluate, and you say, well, I almost got my 2 to 1. Could have had 2 to 1, yes, but I tried to be a little bit too greedy on having a runner, and that didn't work out. Like I talked about with Maple on live stream a few weeks ago, most people should not have runners. Most people should just have target 1, target 2. And for most people, especially depending on what size they're trading, 20 to 25 points for target 2 is still exceptional. If you did 25, you're targeting a total of 40 points, risking a total of 30 points. That's, you know, 1.3 to 1 reward to risk. Still very strong. Okay. So, the last thing for me, and then we can, Shiny, you can jump in with anything else that you want to. Yeah. Oh, okay. Okay. Yeah. So the last thing, and just you don't have a problem with me posting this on the YouTube, right? Okay, great. All right. Yeah, I'm not gonna. So we're just gonna do this one. All right. The one thing that I covered specifically with, and I probably should use this chart, this one here. I covered this specifically, I think, with jalapeno juice. Clear for the homies. And let's go over NQ. So a lot of people are trading NQ. A lot of people are trading NQ, right? And just really quickly, so there's a recording of what I covered, is just watching what VIX has been doing. Like, I'm a huge proponent of watching VIX. I think you guys know that by now. When VIX is really like in the 16 and lower range, the range on the market, it constricts considerably and you get smaller moves. Now Jalapeno was saying that he is seeing moves go 15 points or to 20 points in his favor. I think this is what he said. 15, 20 points in his favor, and then come back to his entry, and that's where he's taking a stop because he's moving a stop up. And I challenged him to, like, well, why are you not taking your 15 points? Why are you not taking something off the table, right? Even with him saying he's taking only like 3 to 5 micros or 2 to 5 micros, take something off the table at 15 points, because all of these days were around or below 16. You can see how tight the market is in terms of the whole day. So looking at this really closely, right? So let's look at this day. This day here, June 25th, the total range on the day was 163 points. So, and we're below set. We're coming down through 17. That was a kind of an anomaly day, but you can see the range is really constricting and VIX is really dropping. The next day, we're at 183 points. Oops, sorry, hold on. No. The next day, we jump up to 256, right? Like, decent day. The next day we're to 225, right? And then you see these are smaller days, but look at some of these big days, right? 526 points. Now, when the range is only 160, right? Or even to, if you just say it's 150 to 300 points, a 15-point move is between 5 and 10% of the entire day's range. So if you're thinking about it and you're trading, right? Like, why would you not trim if you just captured 10% of the day's range? Well, Joe, how can I know that the market's only going to be moving that little bit, right? Well, look at the VIX and look what's happened in the overnight session, and then look what's happened in the first 30 minutes of the session, right? Plenty of people have talked about, if the orb range is tight and the earlier range is tight, and we're still within the prior day's range, we're probably looking at having a very crappy range day, which often plays out. Look at some of these days here. This day, the VIX is around 15. Same days right here. Range is 148. So imagine catching a 15-point move and then not taking any profits on it because you're hoping for more. Like, that's just your greed getting the best of you. So keep in mind where VIX is. Keep in mind the overall volatility of the VIX candles, the VIX day, and of the market so far when factoring in what you're looking at for your move. Now, when you had this big move where we gapped up, we pushed up, and then you see how the VIX starts to make a very large sudden move. VIX is moving and the market is moving. It's a 555 point day. When you can see that momentum and you can see that movement within the charts. But when you're seeing a lot of choppy candles, like 718, I probably need to do like 90 days, 10 minutes. What did that day look like? It probably looked like shit. Yeah. Yeah, exactly. Very tight range. Very tight range. Here's the overnight session, high and low. Right. This is 64 points in over 12 hours, like whatever it is, 14 hours. It moves 64 points. So yeah. Oh, actually, I'm sorry. The pre-market high was really here, but it wicked over it just before the open. But okay, 75 points. 75 points. So when you get a nice like pre-market low breaking base or whatever you get, like if you get 15 to 30 points, like go ahead and take it because it's not giving you a whole lot more. So that's just what I wanted to cover there. So Shiny Sir, what do you got for a question or discussion topic? Yeah. Yeah. Right. Mm-hmm. Yeah, this is the overnight session high, but if you wanted to do like pre-market, it was over here. Mm-hmm. Yeah. No, well, in for me with the bases loaded, right? If I look at Friday's chart, I'm gonna go to just clear sets on all of them. Sorry for all the drawings and stuff, but so ES is on the right, NQ's on the left. So like when I said that this was like A plus and this was like the terrible short here, this is being a terrible short. Yeah, you're right. Like VIX was flipping CBC long, and that's what kind of threw things off. But by here, VIX had flipped CBC short, and this is where they gave you that second opportunity for the long, and ES never flipped CBC short. So like I was, looking at the market like, okay, ES is still cooking upwards. I don't know what VIX is doing because this weird news candle threw it off. Like it gapped down here and then it popped back up. So I was definitely thrown off by like what is VIX doing because this doesn't quite align with what I'm used to seeing. But otherwise, from a bases loaded perspective, it was still there. And then it came even when price came back down here and it came back to testing, you know, which it's marked correctly here on this time frame on the 10-minute, so it just doesn't do it right on the lower time frames, I guess. But this is your initial balance high, your first 1 hour of trading. It literally glided back into that level, popped back up, came back down, swept that level, and that's literally like the perfect short trap. And like if you bought literally anywhere in this candle coming back up, or you bought in here, you were fine, right? Like you were gonna be fine. And this, yeah, this never flipped short, and here's where VIX flipped back short. I mean, here's where VIX flipped back short too. Here, pre-market low holds, comes back up, makes a lower high, flushes under. Now you have bases loaded. Bases loaded, like grab the pullback. Oh, actually, you don't have bases loaded because this one's here. So then you don't get it to here. It means anywhere, any of this buying in through here. Yeah, it was tough. Like again, it's just like anything else. One strategy doesn't work every day. You know? Yeah, 20 EMA. Correct. Yep. Yeah, yeah. Holy shit, I've been talking for an hour and a half. Yeah, I know, no problem. I hope that there's some value in it, but at least for me, like I'll say this too, like at least for me, there's a lot of value in just going back and reviewing it, and like knowing where I missed trades or where, there was A plus opportunities that I wasn't maybe present for. Um, I will say though, like on a personal note, like when I was trading in through like this area and I took those two trades and I cut like I scaled here when we broke the orb low, moved stop down, cut one or whatever, and like was all out the other one because again like two targets. By the time like this whole thing was over, I was like mentally exhausted. And I don't know, I'm sure that's probably just a combination of like multiple days adding up. So me personally, because this was Wednesday, correct? Yeah, this was Wednesday. So I was pretty bummed to see a perfect like orb low break and base trade play out like early to mid afternoon, knowing we get this is a nice afternoon trade. But the right thing for me to do was to just cut my trading off and get away from the screen. Yep. Yeah, for sure. Yeah, it's absolutely right. I mean, I just chart NQ and ES, but I think like most people would be better off to just trade MNQ, right? Just trade between 3 and 5 micros and build habits and successful routines. So, all right. Well, I think my wife's gonna be home shortly, and I'm glad you guys tuned in to study. I appreciate having you all. I'm gonna get this video posted really quickly, and we'll try to do this again as soon as possible. So, if you found this video helpful, I would appreciate a like and a comment on the YouTube. It'd be awesome for me. Thanks, guys.